Can CRA require deposits or security from U.S. businesses? Many U.S. companies are surprised to learn that registering for GST, HST in Canada can come with a price tag beyond regular tax payments. In some cases, the Canada Revenue Agency requires non-resident businesses to post a security deposit as a condition of registration or continued compliance. This security is not a penalty. It is essentially a guarantee that you will pay or remit amounts owing under the GST-HST system. For non-resident businesses without a permanent establishment in Canada, CRA treats it as a way to manage collection risk. When non-residents must post security. Under the Excise Tax Act and CRA's administrative policies, a non-resident person who does not have a permanent establishment in Canada and who is required or who applies voluntarily to be registered under the regular GST-HST regime is generally required to provide and maintain security. There are certain exceptions, but the basic idea is that if CRA cannot easily enforce collection in Canada, it wants a financial buffer. This requirement applies to non-residents registered under the regular GST-HST regime, not to non-resident vendors who are only registered under the simplified digital economy regime. The simplified regime was intentionally designed without a security requirement to make compliance easier for foreign digital vendors. How the security amount is calculated. CRA's administrative policy generally sets the security amount at 50% of the non-resident's estimated net tax for a 12-month period. Net tax is the difference between tax you expect to collect and input tax credits you expect to claim. If your estimated net tax is positive, half that amount is requested as security. If your estimated net tax is negative, meaning you anticipate refunds, the same 50% logic still applies because CRA also wants protection against over-refunds. There is usually a minimum and maximum security amount. Recent guidance from advisors and CRA-related materials indicates a minimum of 5,000 Canadian dollars and a maximum of $1 million for most non-resident registrants that fall under these rules. Exceptions for smaller non-resident registrants. Not every U.S. business that registers under the regular GST-HST regime has to post security. CRA generally does not require a security deposit where the non-resident's taxable supplies in Canada are 100,000 Canadian dollars or less over a 12-month period and the annual net tax is $3,000 or less, either payable or refundable. That exception is designed to spare very small non-resident registrants from the administrative burden of security while still allowing CRA to insist on protection when the amounts at stake are larger. Forms of acceptable security. Security can be provided in several forms, including cash, certified check, money order, or a qualifying bond or letter of guarantee from a financial institution that meets CRA's criteria. CRA-specific forms, such as the GST 114 bond for non-resident person without a permanent establishment in Canada, are used to document and implement the security arrangement. Over time, the required security amount can be adjusted based on your actual net tax for the previous 12 months. CRA may also release the security if you cease to be registered and all obligations are settled. Security and the simplified digital regime. Non-resident digital vendors that only register under the simplified GST-HST regime, primarily for business-to-consumer digital services and certain platform supplies, are not required to post the same kind of security. The simplified regime was created to ease administrative barriers and encourage registration by removing some of the friction that comes with the regular system, including the security requirement. However, if you register under the regular regime instead, for example, because you want to claim input tax credits on Canadian expenses, you may fall back into the security rules if you are a non-resident without a permanent establishment. What happens if security is not posted? If CRA has determined that you must post security and you do not, the agency has options. It can delay refunds, withhold certain amounts, or take other administrative steps until security is provided. Some advisors note that CRA may offset expected refunds against the required security amount or otherwise use its collection powers to protect the government's position. For a US company expecting regular GST, HST refunds, especially import-heavy businesses using Canadian fulfillment, the requirement to post security can materially affect cash flow if it is not planned for in advance. Final thoughts. Yes, CRA can require deposits or security from US businesses that register under the regular GST HST regime as non-residents without a permanent establishment in Canada. The security is usually calculated as half of your expected net tax over a year within set minimum and maximum amounts and is waived only for smaller non-resident registrants. For US companies considering GST, HST registration, this means security is part of the cost-benefit analysis. You need to weigh the advantages of claiming input tax credits and controlling the customer experience against the cash you may have to park with CRA as security. Thinking through that trade-off early will make your Canadian expansion much smoother. If you want deeper guidance on whether security will apply to your specific structure and how to minimize its impact, our website has additional resources focused on non-resident GST HST planning. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.